Hello there, day 3 of my YouTube challenge. I'm not sure if I'm going to get to the end of the year. This is hard work, putting up all these videos on YouTube. I have to edit, have to upload, have to put the tags in, what sort of topics of conversation I'm having here. Goodness. I hope for your sakes and my sakes that I can keep it up, because I have a lot to share. Like, did you happen to catch what Penny Wong said yesterday on TV? Let me cue it up for you.
Many countries in Asia are turning to Russia for oil. Will Australia buy Russian oil?
We maintain our sanctions on Russian oil, and that's because we don't want to fuel Mr. Putin's war machine.
Okay, thank you. Thanks for your time.
My goodness. You know, there's a guy on YouTube that I follow, Gerald Celenti. He's from New York. He's a American-Italian or Italian-American or whatever. He's Italian. He doesn't take no shit from nobody. He gets very angry with politicians. He has a favorite saying, and in fact, I think he sells a t-shirt as well. I'm going to have to get one of those. It basically says, "Hey politician, who the fuck are you to tell me what to do?" And then he collaborates that with a hand gesture using one of the fingers. I know what, you know? I know you know. My goodness. The umbrage I have to take with Penny Wong. In fact, her name sounds like a swearing. You know, you should say, Penny Wong, bleep, bleep. Penny Wong, bleep, bleep. Say it with me. Penny Wong, bleep, bleep. What a... How dare they? They can't fix their mistakes. Incompetence. No, no. And they force it upon us to pay for their mistakes, for their stuff-ups, for their F-ups. Yeah, that's the world we're living in. That's the world we have in Australia. My goodness. We used to be an envy of the world, Australia. What's happening nowadays? We are becoming irrelevant. So, I'd like to talk about capital gains tax scam. Well, essentially, you may not think of it this way now, but once I'm done, I hope you will agree with me that it's really a scam devised by the government to dispossess you of your money or your assets. What it is, it's essentially masquerading as a tax on your gains. For instance, in real estate, everybody understands real estate. You buy a house for one price, it goes up in value after, quite a few years, and then you sell it. And because it was an investment for you, you weren't living in it, you have to pay capital gains tax, which is the tax on the portion that is the difference, the profit that you make, supposedly. So, as an example, I did a Google search and I said, what's the average house value in Hobart? What was it in 2016? And Google said 241,000 for a freestanding home. That was the average. What is it now currently? Well, now Google estimates 752,000 for an average house in Hobart. Okay, so in this example, if you bought that house in 2016 and you sold it in 2026, 10 years later, the difference being is 752 minus 341, you have 411,000 according to my math. And so that that's the amount that the government then will tax you on. Now, it's okay if you measure it in Aussie dollars. And this is the point I want to make. Right? This is a measuring device. How do you measure the gains on that house? Now, in 2016, may I suggest that we measure the house by the true measure of wealth? What is the true measure of wealth? Well, there's only one true measure of wealth. And it's been this way for thousands of years. Some argue 6,000 years, some argue more than 10,000 years, some argue 3,000 years. Whichever way, it's thousands of years. The true measure of wealth has always been gold. So, let's run the same exercise in gold ounces. What was the gold ounce worth on average in 2016? Computer says $1,800 Australian, maybe a tad less. What is the price of gold in Australia in 2026? Just for the argument's sake, let's take the high that it reached in end of January of this year, which was roughly 7,400 Aussie dollars. So now, if you look at how much that house cost in 2016 in gold ounces, all right, the house was 341 and each ounce cost about $1,800. So I'm just doing a rough calculation in my head, which is, I'm sure is wrong, but I'm coming up with about 190 ounces of gold. Now, if we sold that house at the end of January when the ounces of gold were 7,400 and the sale price was 752,000 Aussie dollars, we received about 101 ounces of gold. So we bought the house for 190 ounces of gold and we sold the house for 101 ounces, roughly. But the point I'm trying to make is that you paid way more in ounces of gold 10 years ago than what you got back now, in this hypothetical example. So what do we have? Do we have a capital gains tax event? No. There is no capital gains. We have lost almost 90 ounces of gold in this transaction. And now, with the interest rates going up, with inflation going up, and I dare say the price of gold will continue to go up because Australian dollars is, as I heard someone say, monkey money. The real money, the gold money, it's going up in the monkey money. So it's all relative. Are you measuring your wealth correctly? Are you measuring it the right way? So my final question to you is, if you know that you lost nearly 90 ounces of gold worth of value, how do you feel paying the capital gains tax on 411,000 notional capital gains? You feel that's just? Or do you think as I do, that capital gains tax is a scam. And with that, I'll leave you today, and I'll be back tomorrow with some more interesting musings and perhaps even some amazing trades on the stock exchange. Look guys, the commodity bull market is just starting. It's like a regatta bullhorn. The sound is rolling over the hills and the valleys. The commodities bull market is starting. It's starting. It seems like it's starting in April. Anyway, take care of yourself and your loved ones. Bye.